All right. And then can you walk us through how you've structured a value creation plan in the past?
Yeah, multiple different ways, but they all seem to have the same components to it, right? And one first thing you would do is we talk about it, oftentimes the team comes together, meaning leadership team, and where it works best is sometimes when you have one level below the leadership team. So the people that are, especially if it's a bigger company. So the company I just left, for example, was 750 people. It was one on the larger size of what I work in. And for that, strategic planning / value creation planning session, which I use those terms somewhat interchangeably, your strategic plan, value creation plan. We included that next level down because they know a lot, right? They know what's their feet on the ground. They're talking to customers. They're talking with the delivery team, whatever. So it's helpful that it includes them. And it starts with laying the groundwork of current situations. And that's often where the CFO plays a big role. It says, okay, here's our, not just our high level total company financials, but here's our product line profitability. Here's where we stand on key performance indicators of all of our types of operational metrics, because you need to know what you're starting with. And then you pick the goal. So a goal valuation, whatever that number may be, might be 3 or 4 times higher than what was originally paid. So that gives you your gaps, right? And you say, well, how do we get there? Well, we've got to grow revenue by X. We've got to improve our churn rate, or reduce our churn rate. In other words, improve our retention rate. We need to have more at the top of the funnel of our pipeline, whatever it is. So it's both starting with current situation, goal, gaps, and then what are those initiatives and who's accountable for them to get to that ultimate valuation. I know that's there's just so many different methodologies that all accomplish everything I just said, but I've used something called the 3HAG way. Gosh, I forget some of the other tools we've used, but ultimately those are the components that you need to have done.
I like that you include that next layer down too, because it gives them a sense of ownership then, right? That they're involved and feel excited. And they don't get that in a larger environment, right? Like I think it's much more like you'll get as much responsibility as you can handle, and you can be involved in, the value creation plan, which is a really exciting thing for folks. That's awesome. Okay. And then how do you determine what levers, so pricing, margin, cost, M&A, to pull first?
Obviously, it depends on the company, right? It depends. And I've worked in lots of different companies, software, pharmaceutical services, tech-enabled services, and it really, actually, this might be a good place. I have a slide that can give some. It doesn't necessarily answer the question of which ones to focus on, but it identifies at least what the discussion should be in that value creation plan meetings or
that's great. Meetings. Yeah. Right? You want to share it?
Yeah.
That'd be great.
All right. Well,
spotlight it. Let me see. Yari, can you help spotlight that? Because it's not working for me.
Yeah, it's spotlighted right now.
Okay.
Not on my screen. I see both myself.
Not on mine either.
Yeah, it's small on my screen. It would be nice if it were bigger.
Hold on. Maximize. There. Is it better?
No, it's
not maximize.
There we go.
Okay.
There we go.
That's working. Perfect. Thank you. Yeah. So this is a tool I use, especially in companies where the rest of the leadership team, and especially if you're including that second level down, may not be familiar with the concept of enterprise value and what that goal is and what it means to be private equity owned. They either work for a public company where stock was traded publicly, or a family owned business where it was a lifestyle business. But especially if this is their first time in private equity, this is a good slide to start with in the value creation plan, and talks about what levers can be pulled to grow value. So to illustrate this to you, and everybody on here will understand this, but just keep in mind the whole audience in a company may not. But starting at the bottom, let's say let's say the company was bought for $100 million, the bottom right yellow square, right? Let's say it was bought for $100 million. And at the time, the company's revenue was $50 million. That means that it sold for a 2 times multiple of its revenue at investment. Now, keep in mind, many companies don't trade on revenue; they trade on EBITDA instead. Right. But this I'm just using revenue as an example because some companies, especially software companies, are more likely to trade on revenue, or earlier stage companies that are don't have a good EBITDA yet. But whether it's revenue or EBITDA that you're trading on, I'm using revenue here in this example. So, my point is, okay, our revenue was 50 million then, we sold for 100, and so that implies a 2 times multiple. And if the goal is to sell it to 400 at a 400 million valuation, well, we can get there multiple ways. One of which is to get our revenue to 100, so grow it from 50 to 100, and grow our multiple from 2 to 4. Because there are levers you can pull that will both grow revenue and improve your multiple, get you a higher multiple. And then we talk about all those things. What is keeping us from growing our revenue faster? Is it, for example, is it just as easy as we have this great customer base, we can sell more stuff to them, right? Get more of their share of the wallet. Could we just reduce our churn rate, or things we can do to reduce churn? Can we increase the top of the funnel of that sales pipeline through better marketing? In other words, bring in more leads. Can we increase our total addressable market through new markets, applications, or geographies? Should we look at a channel strategy for sales? Might we be able to sell more with the channel strategy? Are there things we can do with pricing, or put in standard price increases? Or is it really our problem is sales execution, right? We've got the great product, great customers, great everything, but our sales team is just not executing effectively. These are, to me, these are those levers, right? These are examples of levers that can be pulled on revenue. And it may be obvious that the company already knows that going into this meeting, but many times you need to have this as part of the discussion to really determine what are those most important levers that we need to pull to grow revenue. And then, you have a comment?
I said I like that.
Yeah. And then even if you do grow revenue, if you grow it to 100, but you're still only getting a 2 times multiple, you'll be at a 200 million valuation. If your goal is to get to 4, you got to grow your multiple as well. And of course, market timing. I'm taking market timing and how that impacts multiples out of the equation here. But there are things you can do to improve your multiple. What the multiple indicates is, just how attractive is your company as an asset to a new buyer. And if you, for example, just having revenue over a certain threshold might take your multiple from X to Y, right? It just might give you a bump there. Having a 3-year compound annual growth rate over X%, I'd put 20 here as an example. Having an EBITDA margin over a certain percent. Like if you're under it, your multiple might be lower than if it were over it. There's certain thresholds that are often used. Same thing with gross profit margin. Having a very strong management team and a bench and succession planning could also get you a turn of a multiple. And then having pathways to opportunities for additional growth. So sometimes it's okay if you haven't executed on all of your growth plans at the time you go to sell. It's part of the story. If you could say, look, here's what you can do, new investor. Like, we got us to here, but these are all these other pathways to future growth that you can execute on. And then, and especially in a software company, having recurring revenue.
Yeah, definitely.
Yeah. So it's just a sort of a visual tool that I find that it's been helpful.
I love that. I love that. Are you, would you be willing to share that document so that people could reference it? I think that would be really great. We'll figure out how to.